Let's welcome in Taher Badshah, who's with us, CIO at Invesco Mutual Fund. Taher, good to have you with us here. Thank you for your time. So 10% off, broadly 10% off from the all-time highs, Taher. What have you been doing? And how much cash is Invesco sitting on? Another fairly mid-sized mutual fund that we were talking to last week was saying that this is I think on Wednesday, they said, well, we're already almost all in. And then of course the market kept going a little bit lower. But you can never time these things. My question, I'm also asking you this question is because if the foreign selling doesn't stop and all this paper issuance, will the dry powder with mutual funds start to run thin? Go on, Taher.
Yeah, so Prashant, I think first off, on the issue of cash, I mean, typically as a policy, as a house, we don't really take cash calls on the market. We've not even done that in the height of the COVID, decline that we saw in the markets. So essentially, I think we just try to mitigate risk if at all we see the possibility of markets being even elevated in the short run or something to see if the portfolio itself can take care of that through adequate diversification and probably moving into certain pockets of value if at all we see some at that point in time. So I think that's generally our approach. Cash is not something which is a very important play as far as we as a house are concerned. But yes, I mean, we are in a situation where probably, more than flows and you referred to, foreign inflows and the paper floating around, etc. That's always a little hard to tell and assess in terms of exact demand supply situation. But I think probably that is still a sideshow. I think the more important thing right now is we're in the thick of the earnings season, and there's a time of the year when we have to actually assess as to what happens when the rubber hits the road. And earnings are going to be important, therefore, to that extent. So they've always been important, but I'm just saying that this is a time when the market would want to see if what valuations are being accorded to different companies are in line with what their earnings delivery is. So I think this is the phase that we are going through, and we're seeing some. We've been in a somewhat mixed trend zone across different kinds of sectors. And I think that probably is a trend which might probably continue for another couple of weeks till the time the result season lasts.
By the way, there's a big move now on some of the top large banks. Look at SBI. After the move on ICICI Bank, I guess the market wants to be with really strong lenders. And therefore, even HDFC Bank is now positive. HDFC Bank was one of the best contributors last week, was trying to battle for the bulls throughout the week, barring Friday. That one's showing some green, but SBI is the one that's really on the move. Bank Nifty is up about 1%. So that's the market. And even on the mid-cap screen, the way the stock prices are turning is telling you something. The mid-cap index for a flash dipped into negative, and there's immediate buying that's come back through. And look at the reaction to stocks like Bandhan, stocks like Yes Bank. The market's mood this morning seems to be buy the dip, buy wherever. Perhaps the worst of it is over and done. It's all out. The closet cleaning has happened, and it gets better from here on. And I think that's the assumption or the call or the punt, whatever you might want to call it. That's what the market's doing with names like Bandhan and even maybe a Yes Bank. Taher, great to have you on this morning. So that's the debate. Let's talk about that, right? On financials, it's murky, it's messy, it's not at all uniform this quarter. What is the approach that you would take? I mean, would you be in the camp that would be willing to buy where the pain is already, all of it or most of it is already out? Or would you stick with pristine sort of names where there are no asset quality issues or the best-in-class franchise?
At least I think as far as leveraged businesses like financials are concerned, we would rather stick to where we see the trends to be reasonably clean. I think it tends to become a little difficult to call out things very early in situations where banks are not, or any of the, not just banks alone, but any of the lenders, if at all, are not doing well. And to take a call that, things will reverse is a little difficult. And so I think we generally try to avoid some of those pockets as much as possible. I think as far as we are concerned, we've got a reasonably balanced allocation, not really being part of many of the accidents right now. And I think this is what like as you said, that trends are really quite mixed. The last week ended on a somewhat somber note with regard to financials and asset quality, and then there was some bit of cheer and reassurance coming from some of the larger banks as well as a couple of NBFCs with regard to asset quality. So I think that's going to be the sine nonetheless. But it is there are certain pockets which are clearly under stress. And when we're talking about MFI and a few other segments lower down the curve, then there are some others which are actually, not too bad. But I think the more important message which the market is trying to give, not just in financials alone, but even in some of the other sectors, is that wherever execution is strong and where challenges are being met quite well by the companies and the managements, I think those are getting rewarded. And on the other hand, there are two situations where things are not likely to go your way. You're going to get punished if there's going to be a disappointment, or if at all, the future looks a little murky in those situations, and the market reaction also tends to be very, severe, as we can see from individual price movements.
Yeah, absolutely. Just on Yes Bank, quick note. Why is the market rewarding it so much? Because there's nothing messy in Yes Bank. The margin is very steady. The slippage ratio has actually improved a little bit. So there are no hidden skeletons, no nasty surprises. It's all steady in an otherwise very volatile sea. So maybe the market is really, in a good mood with that.
Yes to Yes Bank today. Noted that point should be. But Taher, hi. Welcome to the show, Taher. Before we let you go, I wanted to ask you about Interglobe Aviation. That's the accident of today. It's been the one that's gaining market share, the only way to play aviation. Suddenly now you have SpiceJet that's managed to raise some money and paying back their loans. What's your view on this space after these numbers we saw from Interglobe? By the way, it's down 10% now. Your take?
So I'll avoid individual comments on stocks, but in general, the sector, has seen a fair bit of vibrancy, and it has been a proxy play as far as travel and tourism is concerned. And obviously, the number of opportunities in this segment have been limited, and therefore we have seen some of the strong executioners and the leaders doing well in this space. I think, in general, we are seeing some bit of. I think I heard Prashant say that a little while ago, that there is some pressure that seems to be there as far as discretionary spends are concerned, and maybe that is kind of unfolding a little bit here, and that has also probably shown up in the commentary of some of the enterprises, both in aviation as well as otherwise. On the other hand, for example, in FMCG, we've seen some companies call out a rural versus urban divide, where rural is starting to somewhat get a little better, whereas urban is, a little soft. So I think divergent trends, or some reversal of trends rather, are developing, where rural is starting to look a little better at the margin compared to probably urban, and that is also influencing some of these businesses which are, in the thick of their consumer, at least the high end or mid end consumer discretionary, strength.
Okay, Taher, thanks a lot for joining in. A short but valid inputs coming in from you. Wishing you a good day ahead, and we look forward to having a chat with you rather soon. Happy Diwali.